little bit about, because obviously the tech sector has been a key focus this week. We've been looking at Mag 7, Amazon coming up. There's been a lot of focus on cloud, and Google Cloud, Alphabet fell under pressure yesterday. Part of that was because of cloud. And we were expecting scrutiny because of Microsoft's results and the cloud picture there. So what are your takeaways when it comes to Alphabet and its cloud growth?
So I think it's kind of the same story that we're seeing with Microsoft, which is the business is ramping, but so fast that they're actually capacity constrained. And when that happens, in order to book more revenue, you have to ramp your capacity. Hence the big uptick in their capital spending, $75 billion. Folks were looking for around $60 billion in 2025, so that's another $15 billion. That tells you that demand is strong. And I wouldn't be surprised if we hear something similar from Amazon tonight with AWS.
Yeah. So is there a trend we should monitor in this respect, especially because it seems like more grace was given to Meta for its spending plans when it comes to AI infrastructure than, say, Google Cloud?
Well, I think when you look at, first off, Zuckerberg kind of came out and he tipped that before the earnings announcement. They were going to spend as much as they were. So the market had a chance to kind of wrap their head around that. And even Microsoft, too, they telegraphed that the December quarter, the March quarter would be capital spending intensive because they need to ramp more capacity. They said that back in September. So now we're seeing this from Google. I do think we're going to see it from Amazon. So it tells you that, we are going to see accelerating demand, Marvell, Nvidia, and others tied to.
The massive semiconductor company Nvidia's stock price has dropped by almost 5% in 2025 thus far. Market-wide worries about a possible slowdown in artificial intelligence, AI-related spending in the upcoming months caused the company's shares to plummet despite strong fundamentals. When the Chinese startup DeepSeek revealed that it will train an open-source AI model, DeepSeek R1, for less than $6 million, which is far less than the $100 million required to train OpenAI's GPT-4, Wall Street went into a panic. Many industry experts, however, are also questioning DeepSeek's assertions that it only needed 2,000 H800 GPUs to train the model, whereas GPT-4 required 25,000 H100 GPUs. According to Alexander Wang, CEO of Scale AI, DeepSeek may have used up to 50,000 H100 chips, but it hasn't revealed this because of U.S. export restrictions. Although Wang hasn't offered any proof, it calls into question the veracity of DeepSeek's assertions. Nvidia may eventually benefit from DeepSeek, even if it has been successful in achieving cost savings in the field of generative AI. Demand will rise as technology becomes more efficient and affordable, which will increase the addressable market as a whole and sales of chips with AI optimization. Therefore, it appears that exaggerated concerns have a bad effect on Nvidia. Astute investors might find it wise to purchase this stock during the most recent decline. I believe it's a strong choice in 2025 for the following reasons. Recently, Nvidia has been able to show both top and bottom line performance at scale. Revenue increased 94% year over year to $35.1 billion in the third quarter of fiscal 2025, which ended on October 27, 2024, mostly due to a 112% year-over-year increase in data center revenue to $30.8 billion. Additionally, the business has great gross margins in the mid-70s% range, albeit they might be slightly impacted during Blackwell Systems' early ramp-up period. Because of its strong profitability, Nvidia is dedicated to giving shareholders a sizable return. The corporation paid out $11.2 billion in dividends and share repurchases in the third quarter. Lastly, management projects that revenue for the fourth quarter would be $37.5 billion, give or take 2%. The initial ramp-up of Blackwell Systems and the sustained demand for Hopper architecture chips are responsible for the excellent revenue visibility. The company is anticipated to have considerable pricing leverage in the upcoming months due to the fact that demand for AI chips is significantly exceeding supply. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
What players do you believe are going to be the strongest or remain the leaders in this space?
Well, so from a pick and shovel perspective, it's going to be Nvidia, it's going to be Marvell, and you have to remember, Marvell is not just benefiting from AI and data center, but they're also working with some of these other big tech companies on their proprietary AI chips. So there's kind of a sleeper play here for them.
Given the growing complexity and demands of AI workloads, NVIDIA's next-generation end-to-end AI infrastructure solution, Blackwell, is anticipated to be essential to preserving NVIDIA's leadership in the accelerated computing market. Air-cooled and liquid-cooled data centers, 7 distinct CPUs, and several networking options are all supported by this infrastructure package. Additionally, Blackwell has shown 2.2 times better performance and 4 times cheaper processing costs than earlier Hopper generation chips running the GPT-3 benchmark model, according to current MLPerf training findings. It is anticipated that the ensuing cost reductions and great flexibility would result in an even greater demand for Blackwell systems across deployment environments and sectors. For Blackwell systems, NVIDIA is presently in full manufacturing phase. The business anticipates that Blackwell revenue would surpass earlier projections of several $billion in the fourth quarter, and it shipped 13,000 Blackwell GPU samples in the third quarter. The NVIDIA AI enterprise platform, which consists of NVIDIA NeMo and NIM microservices as an operating platform for creating copilots and custom AI agents, is also becoming more and more popular among enterprises. This platform is being used by well-known businesses like Salesforce, Cloudera, SAP, and ServiceNow to speed up the creation of AI applications. Consequently, with around 1,000 businesses currently utilizing NVIDIA NIM, the enterprise AI platform is anticipated to emerge as a significant income generator in the upcoming months. In fiscal 2025, management anticipates that NVIDIA AI enterprise sales would more than double annually. NVIDIA has effectively made the shift from a hardware business to a provider of full-stack AI infrastructure. Additionally, NVIDIA sees great potential in fields like robotics, autonomous systems, and industrial AI, where foundation models must communicate with and comprehend the real world. With the help of NVIDIA's Omniverse platform and its new Cosmos technology, the business is preparing to take advantage of these physical AI potential. By conventional standards, NVIDIA's current price may appear costly, as it is selling at over 28 times forward profits. Nonetheless, a number of variables support the valuation's apparent wealth. In fiscal 2025, analysts predict that the company's sales and earnings per share, EPS, will increase by 112% and 127% respectively, year over year. The two major changes in global computing, the rise of AI factories that produce digital intelligence around the clock, and a $1 trillion upgrade cycle at data centers to move from CPU-based computing to accelerated computing, will be advantageous to the chip giant. Finally, the business trades at a price, earnings to growth, PEG ratio of just 0.2, while having sustainable competitive advantages, including a 90% global GPU market share and a strong software ecosystem developed to support its hardware offers. Thus, NVIDIA appears to be a wise choice for 2025, given the company's potential for future growth. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
With his big batch of charts to finish the week. So Kevin, we were looking for a little bit of excitement, maybe a catalyst for this market because it was pretty sluggish to start the day, and we got it. Unfortunately, though, it's resulted in some red arrows. So S&P 500 down about 1% right now with less than a half hour to go into the close. What levels are you watching specifically over the next half hour?
Yeah, so going into the close, we want to really try to hold, or maybe we even touch 6,008. That's going to be the 20-day moving average. And if we do kind of touch that level, maybe we get some buyers to really step in. If not, 6,000 could actually be a little bit of pen risk for the market here today. What's actually very interesting, we actually hit that 6,100 on an intraday basis. I got very close to it. Actually, we did cross that line there for a little bit there. And then we saw that fade. So keeping this overall channel intact here on the longer term time frame, but going into the close, obviously, once again, looking at 60.30, we really wanted that to hold. We're kind of below that right now, 6,000. We do have some pen risk. If we do get some form of a bounce, we need to start reclaiming some of these intraday highs, if you will, right? So hitting 60.35 first. The next area that you're going to be looking for is 60.56. We might get a little bit of a ramp, but one thing just to kind of note, Caroline, since the Trump administration, each Friday, we've actually had red days, right? Each Friday, we've also had the VIX kind of pop to the upside. That's why the chart that we actually see on the longer term time frame looks the way that it does. So you also have to kind of keep in mind there may be some de-risking happening going into the weekend because there is so much uncertainty, which is kind of creating this cycle behavior with the market so far here. So the chances of a ramp, anything's possible, but it just has not been the case the last 2 weeks on Fridays. We've seen a small bounce, but nothing that would be 30 points or 40 points back to the upside.
Yeah, and President Trump already preparing us for what could be a volatile week ahead because he said that reciprocal tariffs are coming next week. So I think there's already probably some jitters about that. So I don't know if you have another S&P 500 chart that you want to home in on, but just as we think about volatility as well, what should we be thinking in terms of the VIX?
Yeah, I mean, once again, VIX, I continue to say this, it's actually relatively low. Saw a little bit of a bump to the upside here today, but we actually had a 14 handle for the VIX earlier this morning, which once again is relatively fairly low. Now, next week, there's not a lot on the calendar to really kind of shake us up when it comes to economic data. We have a lot of commentary coming from the Fed. So usually if you're looking at a seasonality type of chart, next week generally is kind of like a lull type of week when it comes to volatility. Now, obviously, we have a lot that's going on with the new administration, a lot of news items hitting the wire. So that could create a little bit more volatility. But usually we actually see a little bit of a ramp up the last week going into March when it comes to volatility. So right now, I would say we're kind of on trend, but on a relative basis, we're not even really pricing in. Well, we are now, but earlier this morning, we weren't even pricing in a 0.8% implied move on a daily basis, which once again is low given the environment that we're in right now.
Amazon and Alphabet recently shared some positive news with Nvidia stockholders. Alphabet, the parent company of Google and Amazon, released its fourth quarter financial results. Both businesses stated that because they are now facing supply constraints with regard to AI infrastructure, capital expenditures would rise significantly in 2025. Andy Jassy, the CEO of Amazon, forecasted that the price of creating AI models would keep declining. However, he also stated that he believes it will be a lot simpler for businesses to integrate generative AI and inference into all of their applications. Additionally, CFO Brian Olsavsky informed analysts that the need for AI infrastructure might result in capital expenditures of over $100 billion in 2025, up from $83 billion in 2024. Sundar Pichai, the CEO of Alphabet, offered comparable observations. He implied that DeepSeek's innovations would not reduce AI investment by stating that a larger proportion of capital expenditures are moving toward inference as training costs decrease. In fact, CFO Anna Ashkenazi informed analysts that investments in data centers, servers, and networking will account for the majority of the $75 billion in capital expenditures in 2025, up from $52 billion in 2024. The argument that the demand for NVIDIA GPUs may rise as training costs fall because businesses will direct their resources into inference is supported by the capital investment guidance provided by Alphabet, the parent company of Google and Amazon. Andy Jassy likened this scenario to how, in spite of cloud services becoming more affordable, sales of cloud computing have actually increased over time. Wall Street projects that until fiscal 2026, which concludes in January 2026, NVIDIA's adjusted earnings would increase at a rate of 52% a year. The current valuation of 50 times adjusted profits appears low in light of that consensus. It's true that experts have set a very high bar, so if NVIDIA fails to meet them, the stock could plummet. The bottom line is as follows. Shareholders of NVIDIA who are anxious about the DeepSeek controversy should relax. More effective AI training methods, according to many analysts, will increase demand for NVIDIA GPUs. And that conclusion is supported by data from the biggest hyperscale cloud providers. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.